was a bit one of the less degenerate ones. Both those guys trying to increase adoption across the Solana ecosystem in different ways. One bit more content, the other one just through like applications that people are going to enjoy using. Great. Seems our recording has started. Zoheb, how we doing? Not sure I can hear you. He'll be rejoining shortly.
Hey Triggs, I'm audible now.
There we go. Yes, you are. Loud and clear.
Perfect.
All right, so I think it's 3 minutes past the hour. I feel like we're free to start. So first things first, let's go over what we kind of know with relating to FAF right now, right? I know all of you, or many people listening on this call, have been loyal beast holders, and arguably this is the moment that they have been looking forward to for the last 6 months. Fully understand, we've kept pushing it back for a number of reasons, but a large part of that is like we want you to like not only just have the token, but be able to do everything that we had envisioned for that token on day one. And so this is the reasons for the delay. But now we are here. We're ready to pretty ready to go. Just doing some last minute tweaks. And yeah, that's a FAFT. The Flash Trade token will be out very very soon. I guess I will say it is not going to be today, but as you can imagine, as we are signaling through everything that we're doing right now, freezing the token, the voltage points on the beasts, starting putting out threads on, allocation details, as well as exactly what you'll be able to do with token day one. It's coming very, very quickly, and the date announcement will come very soon as well.
And a very quick note on that front is that we've
Sure.
got 70 beasts which are yet to level up. So they've got enough VP to level up,
Oh
but they have
yes.
leveled them up. And that's a clear marker out you've announced that if you've got VP and if you do not level up, then your final allocation would be based on the level that your beast is at.
Yeah. So if you guys, we have Chief Raider here saying he can't hear anything. Everyone else want to chime in? Maybe see if it's not a universal issue. But okay, yeah, Jotzi's saying all is good. Chief Raider, figure out your audio situation over there. But yeah, as if you have your beasts, make sure that you've leveled them all up. Some of you seem to have earned some voltage points and not pressed the level up button. Which why would you do that? You've put in all the hard work. It's just one more click. Funnily enough, I think also so we found some people had burned their beasts inadvertently. So the total supply is actually a little less than the 5 that we started out with, right?
Yeah, they're just two beasts on that note, and it's probably someone trying out Soul Incinerator. Good thing is that's a reversible burn. That's not a permanent thing. And then they should be just good to go on to their NFT page. So the two mints is something that we've got. So because the owners closed it, we don't know if that happened through a multi-sig or through maybe a liquidation thing that happened on those banks integration back in the day with NFT Borrowland. So that's reversible if the owner shows up. And then we've been trying to kind of put out a full disclosure on how to reach out if you're the owner of such a beast. But otherwise, like all things said and done, we just need people to hit the level up button if they've got the VP. Otherwise, like once we have the final allocations posted and the TGE kind of flagged off, there's no way that's reversible.
Indeed. Yeah. So as far as, let me just go over a few things before I open up the floor to questions. But feel free to put them in the chat. We'll kind of keep track of them. is like why are we doing it this way? And this has kind of gone over in the first paragraph of that 80% post. It's like, well, first, number one, in case you guys haven't heard, beasts are going to have an 80% allocation of FAF token. So of all the things minted day one at TGE, beasts are getting 80%. And it's worthwhile to note that this 80% is very much, we wanted to represent ownership. And so you guys have been there since day one, kind of stuck with us, used the protocol, and largely like your feedback on day to day is what drives a lot of the direction of Flash. And so I think it comes natural that you deserve a lot of the ownership of the protocol as such. And so first and foremost is like we're doing it this way because of accountability, right? Like we've worked hard for over 2 years at this point. And the business as a whole, Flash Trade as a whole, has generated some profits, and up until this point, that has benefited just team members. Usually, at this stage of like crypto company's lifespan, they say, "All right, we have some product, we have some usage. Let's release a token." And usually, the way that token is structured means that if they've made like $100,000 worth of profits, but mint a token that's worth $10 million plus and give themselves 20%. For all that work, yeah, sure, they created something that made $100,000 in a year, but they've minted a token of which they can sell $2 million worth very quickly to reward themselves. And this is usually a pretty, for most people, $2 million, I would say, is a sizable chunk of money, in that it changes the way they live. It changes, their motivation for the work that they do every day. And so when like considering these valuations, you first of all, like, for something to make $100,000 and to be worth, $20-30 million, people are expecting that to grow massively. And that's just going to be less likely when the team is less motivated because they've kind of changed their lives already. Furthermore, a lot of these tokens don't even ever plan to kind of route revenue to holders. So they're just like pure governance tokens or pure utility tokens. And for the most part, the real value is in the equity. The real value is in the fees that are being generated by a protocol, and all that ends up with the team anyways. So you're kind of left with, this has been how crypto companies have done things, or many of them have done things in the last 3-4 years. And it's what's kind of caused this, I guess, distrust from the community, right? I think even in a couple posts, they were like, no, we can't think of these tokens like TradFi tokens because they like traditional finance stocks or equity, because for the most part, people have experienced this like negative outcomes, and rightfully so. Like that's how they've been structured. That's how the game has been made, and we at Flash have been on the other side of what's our approach, and that approach is zero team tokens at TGE. Our rewards for the work that we've done is purely just the revenues that we've been able to generate, and minus our costs. That's it. In order to take the next step forward, it involves catalyzing a strong community, such that our exchange is the place people go to trade. And so in order to do that, you have to give people the incentive to be invested. And what better incentive than literally just being invested, doing the exact same things you're doing right now. And so we'll have zero team tokens at TGE, and in order to earn these tokens, which definitely carry a lot of value with them, and we'll go into kind of the rewards and future revenue sharing plans in the future for that, we're going to have to do some work ourselves. I think we're most apt to do that work in that we've done that work for the last 2 years already, and so with further product developments, we're gonna be the best people to do that. And I think the market will agree with that point. And thus, when we say, "Hey, we want Flash to add this thing to it, and we expect it'll increase the value of the whole company by, let's say 20%," our ask will be that, like, "Hey, we will inflate the supply by less than that 20%. Thus, if you add 20% of value to something, but only inflate its token supply by less than that, let's say 5% or less, what you've now done is added 15% of value, roughly, to all token holders." And while doing that, you've also given the team some tokens. And this is how decisions are going to be made moving forward, is that every single decision that is expected to add value, the team will be rewarded less than that. And this is kind of like the nature of futarchy. And it has to be. And futarchy kind of moves away. Like, you don't have to trust me for me to tell you, like, hey, this is going to add X amount of value. Because of futarchy, the market deems exactly how much value something is expected to add. And concurrently, if the proposed team's proposal is going to give tokens that are too much for the value that it would add, the proposal will fail because the market will have expressed its opinion to do so. And we're very excited about this. I think it just cuts through all these sort of like governance games that a lot of protocols play. We've seen instances of allegedly locked tokens putting in their vote and being able to push through any proposal that they want. We've seen instances of proposals going up and the team not getting the results they wanted, and now they're like chastising their community for not voting correctly. We've seen proposals go up where perhaps they have the right idea, but it's just like too crudely done at this point. And so you didn't involve the community enough in formulating the proposal. And it's all these kind of pain points for the crypto token holder that we want to address and make better. And I think this approach definitely does that. Another key feature that I think folks fixated on is that FAF will be mintable. So this kind of allows us many different things, but ultimately the minting is going to be governed by futarchy. So we can't just mint tokens because we want to. The only minting of tokens that happens is if the market has deemed that it is more valuable to mint those tokens than not to mint those tokens. And again, it goes back to this equation that I was talking about earlier, where if something adds more value than the inflation that's proposed, then all token holders will experience a price increase in their tokens, and thus, it's okay to do these things, or at least I would hope so. I think we want number to go up, right, guys? And so we're really excited to kind of accomplish, to set inflation through this method, but it requires FAF to be mintable. Otherwise, if you pre-mint everything, you have this number of FDV that's not accurate, especially if all this stuff is going to trickle out through futarchy anyways. Let's just take it all the way and let's make it mintable, and let's run this like a more proper, like how the traditional finance stocks run. When they want to issue new stock, they go through a governance process and they determine whether it's good for current holders, if the current holders are willing to be diluted in order to accomplish whatever they're trying to accomplish with that issuing of new stock. Same thing here, except it's not a board of directors deciding things. It's futarchy. It's the literal markets saying like, no, this will increase the value of it. And if you people have questions about futarchy, we'll definitely happy to educate y'all. But essentially, that's what futarchy does. Is it says, what does the market think about this decision? Is it good? Great. That means the number will go up. So we're very excited to kind of take the step forward, and all these kind of points that I brought out can be looked at the threads that I linked in the Beast chat. That you can find them on our Twitter as well. There, I think we have the 80% one pinned, and now we can. I think maybe this is a nice stop here to just kind of answer some questions thus far. I see Mighty Mags here. Putting a lot that we're putting a lot of responsibility and trust in the community, and absolutely.
I think Trex got cut off for a bit.
Sorry.
We'll be taking some questions from the chat. And I hope I'm audible for now.
Yes, you are. Anyways, so Mighty Mags here audible, giving us some props.
Anyone in the audience, if you could respond, Rakshit, Rasathat.
Oh, I guess I cannot hear. We cannot hear each other, Zoheb. Interesting. Huh. Not sure why we're having so many issues here. Hopefully Zoheb can hear me now.
Yeah. You're
shout out to Mighty Mags. Appreciate the kind words. And Chief Raider, the exact date will be announced very soon. It's also coming very soon. So we'll and by soon, definitely like we're talking weeks at most. and not another quarter. How much advance notice will you give it to TGE? I would expect it to be like 5 days to a week or so.
Yeah, expect announcements by end of this week, because we are really trying to tidy up all of the flows where some beasts have not been active, or like there's a lot of beasts that can level up but haven't. So we're in the process of kind of going out with announcement on those fronts and making sure everyone is accounted for. So that's what we've been waiting for. And then the whole new VP structure, because now we're moving away from beasts, but voltage points continue to be a part of the whole incentive structure that we've got at Flash. So turning the whole experience that you've got with beasts right now into something that goes on to reward stakers or people of staking FAF. That's the thing we've been working on, and we'll be announcing details and the whole structure around it as we proceed to the TGE. Because at TGE, the moment you get your tokens, you're able to stake them and then get involved with rewards, utility, and governance, all of them kind of combining all together. So day zero, you have all the other stuff kind of move over. And then Beasts also get to take over their previous referred users. So rebates are also carried forward. And then that's the way we're looking to kind of nail this whole thing in a smooth way, where you don't feel the transition going from the Beast to your staked token accounts or how you're going to stake FAF. And that's the thing we're going to come out with announcements for. And yes, and yet again, a reminder for people who've got the VP on their piece but haven't leveled up to do so, to make the process easier even for us, because it's all going to be programmatic. There's no snapshot, there's nothing. Right now, your VPs are frozen, so you're not going to earn more points for the time being until the TG happens, and then you transition to the new VP system. But people who've got enough VP but haven't leveled up, that's one of the biggest blockers for us to kind of find ways to hypothecate and then get it all sorted. So we request all the beasts who've got the VP to level up, and then we'll be moving forward for the TG following all of the announcements in a week.
Yes, indeed. One note on that, I know as you say, like, and at TG, when you are deciding to burn your beast in order to claim the token, this will not carry any vesting with it. So that I think that's one key piece of information that people were kind of speculating on. I think it even became a rumor within the beast that yeah, there will be vesting for the larger ones, but no, that's not the case. There will be essentially a decision to be made at claiming whether you want to stake or whether you want to claim immediately, and experience a small penalty for doing so. But nevertheless, as a user, you have access to the full amount of your tokens essentially on day one. Some digits here saying, yeah, if some people unlevel their beast, that's basic negligence. We largely agree, but we do kind of want to make sure that everyone at least knows about it. Yeah, so I think that covers a lot of it. I'm happy to go into the next portion of kind of the material that we've put out, and that's like the rewards portion and how that will function. But perhaps some questions first. I think I see some people typing. When TGE, as I've said, it'll come in the next couple of weeks. You can see, but you can expect announcements on specificity in the next week or so. So Leg has his tokens airdrop to Beast 80% of total circulating supply, fully unlocked at TGE for trading, buying, and selling. I think it's a little bit more if we're talking about fully unlocked, because the reason for that is that a large portion of of all the tokens being minted, I think something like 9-ish% or 10%-ish is going to be the first year rewards. So like essentially the inflation that we're going to be using to incentivize certain action. So right now, Beast experience these VPs and they earn, and then they're able to level up their Beasts, or they were able to, and thus able to increase their token holdings that way. We want to secure the first year rewards such that Because I think it's such a valuable thing for a protocol to do, especially one like ours that hasn't used this incentive before. Um, so what that'll do is like we'll incentivize similar like trading, LPing, as well as like referrals. But on top of that, because we're moving the system a little bit more off chain than the voltage points were, it'll allow us to also incentivize things like Loop Scale or Camino when they do finally kind of incorporate FLP, and you'll be able to receive rewards for using those DeFi integrations, which are obviously very helpful for Flash. If you use things like Loopscale, Camino to lever your FLP, that's very beneficial for us, right? That's more assets in our LP that people can trade against. So for that reason, like, so to answer the question of like, is it 80% of the total circulating supply fully unlocked? It's actually a little bit more than that because those first year inflation rewards will be, uh, trickled out throughout the whole first year. So Beast have a lot. and yeah, like for and yeah, Zoheb is saying here about 4% of it will be paired up for initial liquidity, kind of targeting this like 10% of liquid like of a market cap. 10% of it will be its liquidity. And if people think that's enough or we need more or less, that can be something that we discuss post TGE. But this is how most tokens are kind of structured right now. You have a market cap, and about 10% of that market cap is the total liquidity available.
Right, and another thing from the chat has been token being airdropped or getting full allocation to sell the allocation at TG or whatever. Then yes, the whole idea that we've got is we're gonna do a burn and claim. So you're gonna come with your beasts and you're gonna burn them to get your tokens. So that's the only way we could prevent people from scam posting or claiming the tokens and then selling their beasts, and this negative loop of people buying beasts with allocations already taken for. So in order to avoid that, with a very heavy heart, we go for the burn of beasts, where you're gonna burn your NFT down to get the required allocation. So you're gonna come to the specific UI that we've got to burn and then claim your tokens. And then there would also be an option to burn and stake. So you get your tokens and you stake them directly and start earning the rewards from day one. And that's where the whole utility and rewards kind of go hand in hand. The utility is going to be similar to what Beasts provide right now, based on the amount of stake that you're going to put in. So while the whole burn and claim thing allows you to get your tokens on day zero at TGE, there is going to be a penalty for claiming the tokens instead of staking them, which is going to be a minimal. And that we're going to come out with the numbers for you. But yeah, there's always this case of you getting the tokens fully unlocked, or there's no vesting or anything involved. You get your tokens at TG, and then you've got your own thing. You decide to stake, and that's the reason we want the whole thing to go together. Staking for rewards and governance and utility is going to be live on TG, so you've got the option of whether you want to continue being a part of the ecosystem, or you want to take your tokens elsewhere and do whatever you want. That's all on TG.
Yeah, so all these details will definitely be revealed when it comes to tokenomics and all that. Yeah, like you are understanding correctly. We can choose to claim fully at TGE with a small penalty, or you'll fully claim and stake with no penalty. That's accurate. For LP decisions, yeah, so as I said, that it'll be initial supply 4% and paired up with another 4% of SOL. So if you think about the math there, it's roughly 8-9% in liquidity, and then compared to how much circulating supply, which is that 80% of beasts. So you're good there. We achieved that 10% liquidity to market cap ratio that I was talking about earlier. Mighty Max with some questions here. After staking is live and the VP is still being tracked, this will be locked by wallet address. That is accurate. We're moving away from kind of this account abstraction model that we were exploring with Beasts. Ultimately, I think it's people have their accounts and don't really want to sell them. They want to keep trading on their accounts. We could revisit it in the future and kind of reincorporate it should that be something that is demanded by users. But at this time, I think we'll be just doing the wallets.
And interestingly, what this allows us to do finally is to allocate VP for limit orders, for stop losses, take profits, and
Yes,
all of that. It kind of opens up the doors for sure, which is why wallet abstraction was like such a big um, um, impediment to us executing those stuff. So now that we've got the wallets logged in, it's just easier for us to kind of go out and have VPs allocated for all the actions.
for sure. The second question is essentially, since no rev share for the first 6 months, will there be a way of like tracking revenue? And yes, there. This is going to be one of like pillars of Flash is transparency across the board, and this includes in revenue and our costs and all these other things. And because it's going to function similar to like a traditional finance stock, right? They give out their accounting statements. They say how much they've spent in the different things that they're spending in order to make the business run. They're saying what their profits are. They're saying where they expect growth to happen either on revenue or in their spending based on prevailing trends. We want the market to have as much information as possible so that they're able to make the best decision when evaluating these futarchy proposals. And so for that reason, transparency is necessary and will definitely be something that we go forward with. Will there be a way? He also asks, will there be any ways for staking users of FAF in the future to also propose a DAO proposal? Yes, definitely in the future, where we'll move to that slowly. It is a matter of, I think, getting people used to this new model before we start also incorporating the responsibility of then also having them think, strategically what the best decision should be. That said, every kind of strategic and move, as well as a futarchy proposal that goes through, will be workshopped with the community. So we hope that by the time it reaches the futarchy proposal stage and trading stage, it has been thoroughly talked about, thoroughly reviewed from any number of angles, even ones that we did not initially consider, and thus we're arriving with the best version of the proposal for the market to trade on. Yeah, Zohab answering that. Yeah, if you can hold all your BEES in one wallet, that's fine. Centralized exchange listings, none are planned at this time. You would very much see a huge portion of the token supply allocated in that direction, given how much those things tend to cost. How long is stake? Can you unstake anytime? Full details on staking dynamics will be released, but it's nothing new.
And then you can
Pretty.
unstake anytime. There's no forced waiting periods. There could be penalties enforced, small penalties to discourage people from doing that, but then you can always unstake at the moment you want.
Yeah. Yeah. So, all right, we have another question here. What are the next steps in the roadmap for this year? We have a lot. Zoheb, perhaps I think number one is going to be, or the biggest one that we expect to have the greatest effect is going to be this Magic Blocks integration, which allows us to fit in infinitely more computation into every transaction, as well as have latency across the board be dropped significantly, whether that be in the price feeds as well as when a user clicks something, they'll get feedback a lot quicker as well. So we're extremely excited about that. It allows us to kind of better the experience across the board for all users. With more computation, we're able to quote in a smarter way. With lower latencies, we're also able to quote better. So for traders, what that means is that you'll have experience lower fees, better spreads, all those things. For LPs, because we're able to do that in a little bit of a smarter way, it also means greater yields. So this is I think is a change that is going to be sort of revolutionary for a decentralized exchange like ours, because it is centralizing some instances of the whole process, but the centralization is happening in a way that is verifiable by anyone. I think it uses optimistic proofs when actual settlement happens, and so what this allows is just to still keep decentralization across the board, and using these kind of roll-ups, ephemeral roll-ups, in order to achieve these benefits, but only during the time that you need them, and not across 2 weeks, 3 weeks. Actually, I think that's being unfair to the current implementations, like 1 week or 2 weeks. That is currently happening with like optimistic rollups on Ethereum. So that is number one, and from there everything else stems out. The possibilities of expanding our token offerings for trading goes huge. We've already designed a pretty nice way to offer these things, but it's computationally heavy, and it has to be in order to kind of mitigate the risks that come in when you're offering trades on things that you don't actually hold. We've seen this happen. We've seen some this happen with like Hyperliquid, where they offer a huge list of assets, but then you have to manage risk across every single one of those assets. And in order to do that, it's just very difficult to do on if you're just purely on the Solana blockchain. You have to use a secondary layer that will give us greater computation. What
Absolutely.
else
And
do we? Yeah.
this also expands us to its a wider variety of assets that we've been looking to kind of support. Number one is like expanding the RWA section, where right now we've got metals and forex. Then expanding on those fronts to kind of have the newer audience come in and have the same sophisticated trading experience that they get with MD5 terminals and elsewhere. That's one of the top integrations in line. And then alongside that, trading volatility and trading other indices apart from what we've got right now is down the line. And then additionally, with the Magic Blocks move, we can have a lot more abstraction, potentially going out in the tangent of using FAF as the underlying payment scheme, or because Magic Blocks helps us abstract the whole transaction delivery systems that you've got with Solana right now, while retaining the whole security of the network, where you're able to undelegate and kind of operate on Solana mainnet by default. That's the most interesting thing which we've got in the pipeline. And then also on other fronts, like improving the whole trading experience, making the UI better by different means, and a mobile app, or going out with a full force to kind of have this Binance-like experience, which is kind of even beyond what Hyperliquid offers right now, is what we're particularly aiming for.
Yep. And I think additionally, the products that can be built on top of a liquidity pool like Flashes, I think are very cool with respect to, because you have a yield generating asset. As long as you are appropriately hedging things, right, you can theoretically have exposure to any asset that you really want. Like, let's say you just want pure SOL exposure. You can use the yield generating asset to sort of get off the yield from that asset, and now you have your SOL exposure plus additional yield. And given how much yield these things are generating, oftentimes it'll overcome what's possible on like a borrow lend market, or even with native staking yield in the case of Solana. So we're very excited to expand our liquidity pool offerings in that fashion. But again, we needed that extra computation. We needed these extra things that Magic Blocks will afford us. And as always, like with Magic Blocks comes a better trader experience, and with a better trading experience comes more traders, which generates more yield, so on and so forth. That is all this to say is like another thing that having a token enables us is, again, this incentivization of actions that we want users to take using the token, which we haven't been able to do before because we did not have a token. And so when it comes to like growth efforts and things like this, we are really able to supercharge new products and really spread the word of like, hey, Flash is kind of the place to trade. And yes, they're incentivizing things right now, and so you should try it out because it's free money. But the hope is, and it's the hope of every other protocol that uses incentives to bring in users, is that they experience it and they realize, wait, this is really nice, and they stay and are converted into long-term users. And so we really mean it when we say this TGE is going to be used to accelerate the process across all angles, whether that be technically, but also from a marketing standpoint and a growth standpoint. It's what having a token gives us the opportunity to do, and we're very much planning to take advantage of that. Should it make sense? I think one last point that I want to touch on before any additional questions is sort of this revenue sharing. I know it's something that we have kind of come out. I'll answer this question, but like afterwards, yeah, we've come out saying like, look, FAF is supposed to represent ownership in Flash Trade, and it very much does. The only caveat here is that for the next 6 months at least, Flash is a growth company, and if we look at how growth companies operate in the traditional finance sector, they don't give off any dividends, they don't give off any profit share, and the reason behind that is like, look, if a company has cash dollars in their treasury, they can do one of two things. They can choose to give it out to their holders, or they can take the unique opportunity of investing that cash in growth and further and therefore like further revenue for the company. And this opportunity is only available to the company itself, to the team that's working behind it, right? Like, you guys outside can't give us cash in order to make our marketing efforts better and then be exposed to the revenue that's generated from those marketing efforts. That's not a trade that's available to the normal people, but it is a trade that's available to the team. And for the most part, for a growth company, it's a trade that they should be doing often and with as much size as they can manage. And so this is where revenue sharing comes in. Like, if revenue is being generated and we're seeing effective growth being made by reinvesting that money back into it, the move to make there is not to start throwing off revenue to token holders. The move is like to follow in the steps of Amazon, Google, Apple, all these companies that for basically 20 years, on paper were losing money, but because they were capturing such huge market share, at the time that they did kind of turn on, hey, it's time to make some profit. Uber, I think, is another example of this. It's time to make some profit. They raked in billions of dollars a year, and because they've reached a more mature state, and that's the same idea as over here, right? Like, if the Flash team has the ability to reinvest its revenue into growth efforts that are successful, then it's worth waiting a little bit longer, because when we do turn on the revenue sharing switch, it'll be a much greater percentage. That and so yeah, like for the first 6 months, this is the case. But our promise and like part of the quote unquote constitution that we'll be coming out with relating to all these governance things will be that every quarter we have to justify this decision to you. That if we want to keep the revenue, we have to say, look, here's our current run rate, here's our what we're burning through, and here's what we want to use the money for. We want to use it in customer acquisition, and we're seeing that customer acquisition has an ROI of 20, 30, 40% for us. And so instead of just giving it out or buying back the token, we believe that's a better ROI, especially if we're able to compound that continuously. And so every quarter we'll be arriving at this decision of revenue share. Is it time to enable it? And if the Futarchy market looks at all the information we've presented it and says, you know what? No, I'd rather have the money in my pocket right now. We believe that'll increase the price of the Flash token of ownership in Flash more than just letting them reinvest in growth. Then by all means, we will abide by that. And now Flash FAF turns into a revenue sharing token. But up until that point, it sincerely does not make sense to do so for a growth company to just start throwing off revenue to its holders. To look at a parallel in traditional finance, the only companies that tend to do this are like banks that are 100 years old. They're well established. They already have like 40% market share. They're not going to get to 80. They have a business that makes a lot of money, and so those companies have stocks that issue dividends, and holders of that stock get some of the profit share. Another example of this are utility companies, right? Utilities are what they are. They're in the city. They already have their market share. Their customers are extraordinarily sticky. You're not sitting around at home thinking about should I change the person who's delivering my water to my home? Like, no, it's very much usually just have one or two options, and one is by far the dominant option. So for those companies, again, they've reached a mature state where they're not going to be increasing their user base anytime soon, and nor is there any way that they could. So for the and at that stage, sure, they issue dividends and share profits with their holders. But again, I would like to reemphasize, Flash is not one of those companies, but nevertheless, when it does reach that stage, the ability to switch that on is always going to be available for there. And throughout this whole process, transparency will be paramount.
Absolutely. And another quick point to add on there is the decision to kind of, if you had to distribute revenue amongst holders, how is the best way to do that? Because even now, what we're going to experiment with rewards on day one, since TGE, would be to evaluate what's the best incentive mechanism. Right now, we've got VP, right? Like, okay, so for now, VP is translated to leveling up your beast, and that translated to you getting allocation in the token. So when we're distributing revenue, that's another model we want to verify that what works out best. Do we incentivize active usage of the platform, which is going to be a point-based share of revenue or rewards? And then there's the other part of just staking tokens. So you get a pro rata share of revenue or rewards based on how much FAF you hold. And both of these things have their pros and cons. So our best effort is at combining both and making sure that, okay, we look at people who've got the stake, who've got FAF as part of the ownership, and then they're also actively engaging with the platform. Maybe they're referring people, so they've got referees coming in and trading, and they trade themselves. All of these actions are going to generate points. So the whole reward mechanism is built in a way to verify what works out the best. And that's tweakable, at least from the start. And then at the end, what this allows us to do is when we have the USDC or the asset revenue share come in, it's going to complement the system where we are able to identify what's the best target audience that we need to incentivize. And that's just going to make a lot more sense instead of it being just a stake-based reward system. So that's what we were experimenting with right since TGE, and that's going to be up for a lot of discussions in the following announcements.
Indeed. Legeg, your vote, your question is: would the Futarki market need to buy at a 5% premium in order to kind of counteract this dilution? And no, this math equation that's being done happens during the sort of proposal drafting stage of we're kind of speculating on what additional value this will bring Flash, and thus set the dilution lower than that. So by definition, by the time it reaches Futarki, the market merely has to decide whether this is valid or not, and it will price a proposal to be worth it if it trades at any premium relative to the spot price. That means we did the math correctly in drafting that proposal. You wouldn't need it necessarily to trade at the premium that we're speculating this proposal to bring. It would just need to trade at a premium. And again, if the Futarki proposal is trading at any premium, what that implies is that it makes the price of the token go up. So this is great. Like these are things that we want. It's things that I imagine our holders want as well. So therefore, when the proposal gets passed, it should mean those things. Are you able to discuss what you're targeting for initial price and market cap? Not at this time. That will come, very close to TGE. Anyways, yeah, I think that covers most of what I wanted to cover today. I think the other things on our token is utility. This is going to be very similar to what you've experienced with our beasts. You stake a certain amount of FAF, you get the utility. And then governance we've talked a lot about. All right, 3-3 wants to come up and speak. Let's see what he has to say. 3-3, how are we doing?
Hello, can you hear me?
Yes, can hear you loud and clear.
Okay. Hey, hi Tim. So I heard that the token is going to be unlocked 100% at the TG. So is there anything preventing from mass sell-off? Do you think, or is just the trust? You guys are just trusting the community not to dump the coin. Do you have any preventive measure?
Yeah, I mean, there are a couple things that we're considering, but at the end of the day, like what the token is worth is what the token is worth, and the market will kind of deem that. As far as as far as like any strict prevention measure, like all those are pretty artificial, and eventually, if people want to sell at a certain valuation, they'll sell at that valuation. One key thing to note during this whole process is that there are people like in the wings that are kind of seeing what we're doing and saying, okay, I want to get allocated, but right now they're unable to get allocated in any reasonable size. The reason behind that is because I think there's maybe 4 level 6s on Tensor right now, and you only one, and they're like drastically the pricing difference on those is huge. So these guys have no choice but to wait until TGE and allocate, when they want to allocate. So yeah, at this time, I'm not going to reveal anything like, oh, we are going to have a bid wall at like, 6 million market cap or 10 million market cap. Like, no, like all these things, when you kind of play them out, all that happens is that people that want to sell will sell, and the effects of the selling are felt on the market as a whole. There's no way to artificially keep a price up if people want to get out, and vice versa. If people want to buy into a token, there's like any artificial like kind of dampening of that. It's not gonna. It will be. Yeah, any kind of artificial dampening will be corrected very quickly.
Okay, got it. So one last thing. So there's no snapshot or anything like this. So we will redeem the coin burning the NFT, right? So anything listed or unlisted shouldn't matter, right?
That's correct. Yeah. When you want to claim your tokens, which by the way you will have plenty of time to do so, you just bring your NFT to the portal, burn it, and you receive your tokens.
Yeah, and then the only thing I'm going to reiterate on that is the final level of the beast that you've hold right at initialization of TG is going to be important. So there's no snapshot of sorts, but again, your level will determine the allocation. So if you haven't leveled up your beast, then sadly, it's going to remain that forever. So if you've got VP already, and if you don't level up, that's the only case where you'll be losing out on potential allocation. So apart from that, if you hold a beast and then the TG is to happen, you could claim any time. If we at least estimate that you'll have a time of 1 year for you to kind of have your tokens right there, waiting to be collected. And then it's up to you when you guys want to come in and claim and then start staking. We recommend doing that on day 0 so that you are in for the rewards for the epoch design and the whole staking incentives that we've got. So that's the thing that's going to come up as we proceed for TG.
Indeed. When Yacht Party, we'll see what the Futarchy decides. If Yacht Party is going to increase the value of the token, by all means. Thanks for the questions, 3-3. I think people always have these things in mind. All right, now we're getting to the jokes part of the call, which means we'll probably give it another 3 to 5 minutes before ending it. But if we don't answer any more questions, thank you all for attending, and thank you all for the support across the last year and a half. It's a very exciting time, the TGE, and I think the way we're doing it is like the best way to catalyze this acceleration and further growth and bring in a brand new community that is passionate and wants to see Flash succeed. Busy Panda already imagining giving 2% of the supply to him. Yeah, we'll see. We'll see if that approves. Yeah, to recap, Tom, you will have 2 options when you claim your FAF. You'll be able to claim immediately with a small penalty, or you'll be able to stake it and participate in this whole reward system, utility system, as well as governance that we've set up for y'all. Full details on tokenomics, how the reward system will actually work, utility as well. All this will be released in the coming week. So be on the lookout for that. But again, I think these systems have been very well explored in crypto, so it's not going to be anything too groundbreaking there. Incentives are pretty easy to structure. It's more than this governance and revenue sharing, and those are the kind of in the ways that the FAF token is looking to be revolutionary. Anyways, guys, I think that arises to the end. Last question: are Beasts of the Week and Alpha getting any more than what their beasts give them a FAF? Yes, they'll be getting a little bit more. The Beasts of the Weeks, back when we were doing that, these were people that really kind of did more for the community for that given week, given on whatever task was set before them. And so we definitely believe that should be rewarded. And then our alpha testers, of course, when we ever release a new feature, those guys are putting it through its paces and usually providing very good feedback of how it can be made better before it's released to the general public. So, they're doing work, and therefore they should be adequately recognized. All right, guys, I think that brings us to the end of the call. Again, thanks everyone.
Yeah, one last
listening.
thing. Reiterating Panda's comment in the chat. Beast of the Week and Alpha role holders are requested to follow up in the link provided.
Yeah. Check the Alpha chat. There's a form for you to fill out. Anyways, thanks everyone for tuning in. We look forward to growing this community and accelerating towards the goals that we have. And yeah, we're excited for the next stage of Flash. Also, all these new products that we're building. Finally, we get to work on them and not focus on token anymore.
Excited for it, guys. See y'all soon.
See you guys.